In today's video, I want to discuss what actually drives profits in derivatives trading. So unlocking funding rates, bases, and yield farming when it comes to futures trading. So these are some of the unseen mechanics that actually power crypto futures. If you like the kind of content on this channel, make sure you hit the like and subscribe. But behind every profitable crypto derivatives trade actually lies a web of mechanisms, that many traders do overlook at times. And sure, you've heard of leverage and liquidations, but real yield actually often comes from less obvious places, such as funding rates or basis trades or perp yield farming. If you want to play derivatives big leagues on platforms like Binance or Bybit or Bitunix, MEXC, OKX, Bybit, all of these platforms, you need to have understanding of these mechanisms or mechanics rather. And this can be the difference between consistent yield and unexpected liquidations. So make sure you check out the links down below also to those platforms and get started using my links so you can get all the different perks. What are funding rates? Let's talk about that. These are periodic payments exchanged between long and short positions in perpetual futures contracts, right? These rates are designed to keep perpetuals in line with spot prices. So you have what we call positive funding, meaning longs pay the shorts, and you've got negative funding, meaning shorts pay the longs. And platforms that use funding rates include Bybit. Funding rate intervals are about 8 hours. Typical range about plus or minus 0.01% to 0.05%. Binance also every 8 hours the intervals there, also about 0.01% plus or minus to 0.03%. The same Bitunix every 8 hours exactly 0.01% to 0.04% plus or minus. High funding rates equals high opportunities and also high risk, right? So these small percentage compounds and yield annualized returns of up to 100% plus in some cases. So you also have something called basis trading, which is arbitrage between spot and futures, right? So basis is the difference between the futures price and the spot price. If futures obviously above the spot there, you can short the future and long that spot. If spot obviously is a larger position than the futures, then you do the opposite there. This is a strategy behind basis trading, a favorite among hedge funds and prop trading firms. Example would be that on MEXC, for example, BTC spot trades at about 60K, while quarterly futures trade at 62. By selling the future and buying the spot, you lock in that $2,000 spread, often realized at expiry or via convergence, right? So that's basis trading. Yield farming with Perps, which is real returns versus illusion here. Some traders treat funding rates like DeFi yield, but not all funding is free money. To earn the funding yield, you must take the opposite of the actual crowd, withstand volatility and potential liquidation, stay delta neutral, that is long spot, short futures, right? So platforms like Bybit, MEXC, Binance, OKX makes this actually easy and advanced. Margin tools are available, but beware, when funding spikes, it often signals imminent volatility. Platforms with the most profitable funding rates, 30-day averages, I would say Bybit, which is a 1.5% BTC funding rate, 30-day average percentage. ETH funding rate, 30-day average also about 1.45%, right? MEXC 1.40 to 1.35% on the ETH. Binance 1.25 on BTC funding rates on a 30-day average percentage, 1.20 on the ETH funding rate 30-day. So a different range there for Bitunix, OKX, Deribit, Kraken futures, for example. Funding rates are wildly, varying depending on the sentiment. Also, using tools like CoinGlass, platform dashboards to monitor them is really, really important. Risks of chasing funding, though. Funding sometimes spikes, often You see this in preceding reversals or squeezes, right? Being on the wrong side of a squeeze just means you're going to get liquidated. Liquidity mining via Perps also only works with tight risk management, okay? So risks are flash crashes, exchange downtimes, auto deleveraging events, false funding, signals from illiquid books. Smart strategies, though, for retail traders, I say, delta neutral yield farming, right? Long spot BTC, short perp BTC with positive funding, right? Net profit, funding payments. Rolling basis trades, they monitor quarterly futures versus spot, capturing premium before expiry, and of course using ideal platforms like OKX and Binance futures. And then you want to use sniper bots for funding, program a bot to actually switch positions based on that funding. Platforms like Bybit APIs, Binance APIs, Bitunix custom bots allow you to do this. So I mean, it's very interesting, and at the end of the day, crypto derivatives are wild for speculation. They are profit machines if you know how to read the hidden signals. Funding rates, basis, and perp yield strategies are some of the bedrocks of real returns for those who take time to master them. So the next time you're trading on Bybit or MEXC or Bitunix, OKX, ask yourself, are you speculating or are you farming yield from the hidden engine under the hood? That's what I have to say when it comes to this particular topic. People have been asking me to kind of give a breakdown of what actually drives profits in derivatives, and just talking about funding rates and basis and yield and farming in futures. If you like the kind of content, make sure you check out the links in the description. Get started, go to our main site, decentralized.news. Also check out smart contract bits where you can play in the Web3 space, sports bit, with no KYC, no middleman, just simply a non-custodial platform with smart contracts, plugging you to the best betting markets in the inner web zone, Web3. And check it out, and also check out the links to my books, DeFi Millionaire, which is at defi-millionaire.com. You can also go get my other books, Tokenized Trillions, Blockchain Applied, all available online on every outlet. Like, share, subscribe, turn on the notifications. I will see you guys in the next videos. Peace, love.